We're honored to have you join us here on Retiring Well this week. We've got 4 great topics lined up for you, and hopefully you find this valuable information for your retirement planning journey. First, John and I talk about an interesting concept. What if we asked you or told you we want you to pay more taxes this year? Stay tuned to learn out why that may be important for you. What do 40-year-olds need to know about Social Security? You're not going to be collecting for 20 plus more years. What should you be considering? Then Jack dives into talking about, is your financial advisor money motivated or mission motivated? What does that mean? And some of the characteristics to look at of how that could affect your planning. And to wrap up the show, Ashley comes on and talks about alternatives to full-time retirement. What are some of those out there and some of the challenges and advantages that could be for your retirement planning?
Retiring Well, brought to you by Centennial Wealth Advisory, financial advisors specializing in retirement planning and serving all of Northern Michigan. Retiring Well, helping you plan for a successful and comfortable retirement. Retiring Well, plan to retire well.
So often here at Centennial Wealth Advisory, we get into conversations about Roth IRAs versus traditional IRAs. And a lot of times people, it's sort of surprising, they aren't super familiar with what a Roth IRA is and how it could potentially benefit them. And so that's one of the areas we spend a lot of time just sort of talking about taxes and how that plays a role. And I know, Art, you actually had a conversation recently that I overheard where you were talking to a client and sort of said, hey, we want you to pay more taxes this year. And I was just waiting for them to see their reaction. And they didn't hit you, which was good. But if you don't mind, share a little bit more about that.
Yeah, no, it's interesting when you throw that comment out there and when you're speaking to taxes, because traditionally, we've all kind of been ingrained, hey, we understand we have to pay our fair share of taxes, but I want to pay any more. I want to pay, if I can squeak by and not have to pay much, it's a win. That's kind of what we've been ingrained to believe in there many years. And so the conversation you're talking about, John, is I was challenging a client that says, I want you to pay more taxes this year. I hope you pay more taxes. And there's more to it with that, right? If I just said that, somebody would be like, well, I don't want to talk to that guy, right? But think about it, many times people come into our office and they kind of brag that they didn't pay taxes. There's sweet spots, especially when you get on Social Security, where you can have a fairly decent income and actually pay no federal income tax, kind of depending on where that's coming from. So people come in and brag about that. Well, oftentimes really what you're doing is you're kicking the can to a bigger tax bracket down the road. And so it's not just, we can't look at taxes in a silo and just look at, oh, I didn't pay anything this year, because likely that could compound something in the future. So we say, I want you to pay more this year. What we're really doing is mapping on a plan for your future. And maybe it makes sense to pay more now, doing a Roth conversion, accelerating income, because you have something down the road, a potential property sale, a capital gain realization, a required minimum distribution coming. Maybe something is happening, and so we can't get trapped into thinking just about year in and year out when we're doing that tax preparation at the end of the year.
Yeah, and I think it's so true. Like accountants, their responsibility is making sure that your taxes for the year are completed properly and the right information is entered into those forms. But that's where we challenge ourselves here at Centennial Wealth Advisory, and our tax planning team is to look at not just this year, not just the next 5, 10, what does the next 20, 30 years look like for you? And so recently was sitting down, she was a widow from Benzie County, and ultimately she was in a position where most of her retirement assets were in traditional IRA, and she thankfully had some after-tax money that she was using as well. And so we mapped out sort of what her income plan looked like for retirement. She was in pretty good shape between Social Security and also had a pension from her deceased husband, and so she had this income stream set up, and she sort of looked at the traditional IRA and sort of said, well, I don't know if I'm necessarily going to need that money. It's nice to know that it's there, but I don't know if I'm going to need it. And so we started talking through things and ultimately found that really her number one goal with this money was to leave to her children. And so with that, just started having the conversation of, okay, well, if you want to try and maximize those dollars, and based on the tax position she was in, we sort of said, well, here's how we could start shifting some amount year by year from traditional IRA over to Roth IRA. Now, she would pay the tax today and then transition to Roth IRA, which would leave the money tax-free to her kids. And as we talked further about this, her children were in a pretty good financial position, and so their income was probably going to be in a higher tax bracket than it is for her. And so again, that objective of trying to keep as much money in the family's pocket versus paying Uncle Sam more, she was fully on board with that idea of, again, it wasn't just do it all at once or anything like that. It was an annual process of shifting money year in and year out from traditional over to Roth, and now building this sort of tax-free bucket of money.
Absolutely. You know, if you're somebody sitting out there and you have retirement savings of any kind, no matter what the amount is, an IRA, after-tax Roth, and you're not having tax planning conversations, you are likely leaving money on the table. And that money, as John talked about in that case, could be in your pocket, your spouse's pocket, your family's pocket, and not Uncle Sam's because of improper planning ahead. Make sure you're doing your due diligence on this and helping yourself so you can plan to retire well.
You've worked hard. Plan to retire well. The success of your retirement depends on a sound plan. If you are retired or nearing retirement, we invite you to an informative live event to help you plan to retire well. There is no cost and no obligation, and dinner is on us. We are Centennial Wealth Advisory, financial professionals specializing in retirement planning and serving all of northern Michigan, with offices in Traverse City, Gaylord, Petoskey, and Cadillac. Our presentation will address important topics such as inflation isn't dead yet. How are you protecting your retirement income? Social Security shortfall. When was the last time you stress tested your retirement plan? How potential tax changes could affect your retirement income? What portfolio moves can you make to protect your assets in bumpy markets? Smart estate planning to minimize taxation, and much more. Call 888-608-5825. or register online and choose the date and location that works best for you. Tuesday, April 1st at Boone's Long Lake Inn in Traverse City. Wednesday, April 2nd at Lakeside Charlie's in Cadillac. Or Thursday, April 3rd at Treetops Hunter's Grill in Gaylord. The live event starts at 6:30 p.m. and is free to attend with a complimentary gourmet dinner to follow, but seating is limited and tends to fill quickly. Call 888-608-5825 or register online to reserve your seats today. Don't miss this important live event to help you plan to retire well. Living life isn't always easy. It puts up challenges and obstacles you'll have to overcome. There are responsibilities. You put in effort to provide and take care of your family, to save and invest, to balance work and life. Planning is the first step to succeeding. Plan to retire well. In our ongoing effort to provide quality financial education, we are now offering a free downloadable white paper titled Tax Strategies for Retirement. Learn about tax reduction strategies that can help you reduce your liability and increase your cash flow. Simply go to cen-wealth.com, scroll down and click the link Tax Strategies for Retirement to receive your free copy of our valuable and informative white paper, Tax Strategies for Retirement.
In today's episode, we're going to discuss Social Security, but this segment is going to be slightly different. Instead of focusing on retirees, we're going to look at what every 40-year-old needs to know about Social Security. Younger workers have a lot to gain by understanding how Social Security works. When workers are approaching retirement, they often are anxious to learn more about Social Security. They specifically want to understand how they can maximize their Social Security payments. Younger workers should also pay attention to Social Security as well, though, and understand the benefits they may qualify for, including life insurance and disability benefits. Younger workers who hope to maximize their payments in retirement should make a habit of monitoring their earnings early in their careers. The Social Security Administration no longer mails out paper statements to people under age 60. However, you can view your Social Security statements online by creating a My Social Security account. You can do this by visiting www.ssa.gov/myaccount to create your own account. Workers age 18 and older are eligible to create an account. If it is your first time creating an account, you'll be required to provide some information to verify your identity. When you open the account for the very first time, they'll ask you some multiple choice questions. The multiple choice questions will include inquiries about financial products you own and previous addresses, and ultimately they're doing this to protect you and confirm who you are. Once you have an account set up with Social Security Administration, one of the first things to check is your earnings record. It is important that you make sure the wage amounts posted to your records are accurate. I know this might shock some viewers out there, but the federal government does make mistakes. Your Social Security benefit is based on the highest 35 years of covered earnings. This is why it is so important that you get credit for every dollar you make during your working years. Most workers pay 6.2% of their earnings into the Social Security system, and employers match this amount. You can find out how much you and your employers have paid into the Social Security and Medicare systems over your entire career using the My Social Security account. The Social Security Administration provides an estimate of how much you will receive in retirement at your full retirement age, which is typically age 66 or 67 depending on your birth year. Your account will also list the amount you are likely to receive if you claim a reduced payment at age 62 and how much your payment will grow if you delay claiming until 70. The estimates assume that you will continue to earn your current salary until retirement, and the actual amount could be different if your earnings change. Another thing you will want to consider is what you would be paid if you develop a serious physical or mental impairment that prevents you from working at the job you had before the disability began or at another position you're qualified for. Disability benefits don't start, though, until 6 months after the disability began. Your children and your spouse may also qualify for Social Security benefits if you were to die. If you are retired or are on Social Security disability, you'll want to research what your spouse or children might qualify for if you were to pass away. Once you have a My Social Security account set up, you can request a variety of documents through your account. The types of documents you can request include a replacement Social Security or Medicare card and a benefit verification letter. You're also allowed and able to download a copy of your Social Security statements to share with your financial advisor. This is helpful as you work with them to build your financial plan for your future retirement. So why should you create a Social Security account? You should create an account because it allows you, 1, to check your earnings record, 2, see how much you've paid into Social Security, 3, get an estimate of your future Social Security payments, 4, find out how much you will qualify for if you become disabled, 5, determine what family members will receive if you pass away, 6, keep your account up to date, and then 7, it allows you to request documentation, like I mentioned earlier, including a replacement Social Security card. If you're interested in learning more about Social Security or other topics we have discussed on this television show, we would be happy to meet with you. You can follow the instructions on the screen to set up a time to meet with myself or another one of our financial advisors at one of our offices across northern Michigan. Whether you are age 40 or 70, we would love to help you plan to retire well.
It's your retirement. How will you live it? How will you be remembered?
Will you be able to take me on vacation?
Will you be there for my ball games?
Will you teach me your values? You'll be able to play with me.
Oh, help me go to college. How will I remember you?
Have the retirement you dream about. Contact us today.
If you like watching Retiring Well, make sure to go to youtube.com/retiringwell and click the subscribe button to never miss any of our TV shows and other informative videos.
Hey, welcome to this segment on 5 ways that you might be able to better understand if your financial advisor is money motivated or mission motivated. So I kind of been thinking about this over the last few years, and I thought it'd be nice to just give you some ideas, some questions to ask and some things to look for as you decide where their heart is at. Okay, the first thing, ask the question, how do you get paid? Do you have any conflict of interest? If so, where? How do you make sure that your decisions are always in my best interest, that my best interests are always top, and you can be above reproach in all of your advice? So if you have a mission-motivated financial advisor, they're gonna have no problem, okay, explaining how they get paid, how they transfer value to you through how they get paid. And there's gonna be a lot of transparency. They're going to be natural in their conversation about how they get paid, where they get paid from. And I think a more money-motivated advisor might be a little bit more fearful of having those conversations. Maybe you can see it in their body language, or maybe they want to quickly change the subject, or they just want to avoid that conversation. So, I think it's fair. It's important to ask, how are you going to get paid for the services that you provide and the value that you contribute to my life? So that's a good one. Second one would be, and this one's a little dicey, but I'm going to send it anyways your way. I think you can ask them, hey, do you give any of your money away, or do you give any of your time away for a mission other than yourself? I think it's important to just know if you have a mission-oriented advisor, they are going to light up with that question. They're going to be able to quickly, confidently answer, yes, the money that comes my way isn't all for me. I actually freely give it here. The time that comes my way, it's not all mine. I actually freely give it here. And they'll be able to go through and explain to you why they support the different missions and the things other than themselves. I think a money-motivated advisor is going to have a harder time answering that question. That one, you might see the hair in their back of their neck stand up the most, where they just want to squirm, or they don't have a good answer, or maybe they're trying to construct, an answer that is just patronizing, okay? They're trying to figure out, well, what do they want to hear? And I think what's really cool about these skills humans have is they have a really good, at the gut level, idea of when people are being honest and truthful and when they're being deceptive. And so I think just the transparency and how they light up to the answer to that question. What do they give away? Because I think this is at the heart of the issue, because there's a great verse in the Bible that says you cannot serve 2 masters. You're either going to be slave to one and hate the other, or you're going to love the one and despise the other. And so, when it comes to the heart of what your advisor is doing and how they answer those questions, a lot of it, I think, comes down to what kind of mission other than themselves are they finding, supporting, and a part of. So that's a great one. What's the third one? Okay, this is a little bit more, systematic as you come into their office. Okay, is this advisor really focused on your goals, on understanding who you are and what your life experiences have been, and how you're trying to make this next season of life go? Or are they just asking the questions to just quickly say, oh, here's a product. Oh, this will be the solution to you. If they don't take the time to pause, ask enough questions to really figure out what might be really good for you, and they just rush to some kind of product that they're selling you, I think that's going to be a way to understand if they're mission motivated or maybe just more money motivated. The better questions that they ask, the better answers you get, okay? And so look for somebody that asks a lot of questions about, so they can live vicariously through you. And then they can take the backdrop of, their expertise, of their experiences, and their growth and goals to actually help educate you. The fourth one would be, what kind of standard do they follow? Do they get to follow the fiduciary standard, or do they follow the suitable standard? In the fiduciary fiduciary standard, we are, okay, as Centennial Wealth, follow the fiduciary standard. We get to always do what's in your best interest. We are legally bound to do what's in your best interest. And so in order to do what's in your best interest, we have to know about you and what you've been through and what you are trying to accomplish, so that when we give advice, it's in line with what you are trying to accomplish. That's why that holistic approach is so important. And when you come into one of our offices, it's not just going to be like who you are and what you're about, but there's a whole system of questions, from income planning, risk, okay, no risk options, tax planning, healthcare planning, estate planning. Once you get that backdrop, now you can actually give good advice. And then, whereas the suitable standard, there's just not as many hurdles that they have to, cross in order to sell you something. And then finally, what kind of educational approach do they take? Do they have the heart of a teacher and a lifelong learner? Do they, produce TV shows to help educate Northern Michigan? Sorry, that was such a shameless plug. But seriously, okay, do they have the patience to do what it takes to teach you? Do they care about your learning and your understanding? And if they do that, to me, that's a mission-motivated advisor. And if they don't take the time, nor do they care about you understanding things, and they just want to get you in and get you out, maybe that's a little bit more money-motivated. So I hope you enjoyed this, and thank you so much for your time and watching this show. Have a great day.
You've worked hard. Plan to retire well. The success of your retirement depends on a sound plan. If you are retired or nearing retirement, we invite you to an informative live event to help you plan to retire well. There is no cost and no obligation, and dinner is on us. We are Centennial Wealth Advisory, financial professionals specializing in retirement planning and serving all of Northern Michigan, with offices in Traverse City, Gaylord, Petoskey, and Cadillac. Our presentation will address important topics such as inflation isn't dead yet, how are you protecting your retirement income, Social Security shortfall, when was the last time you stress tested your retirement plan, how potential tax changes could affect your retirement income, what portfolio moves can you make to protect your assets in bumpy markets, smart estate planning to minimize taxation, and much more. Call 888-608-5825. or register online and choose the date and location that works best for you. Tuesday, April 1st at Boone's Long Lake Inn in Traverse City. Wednesday, April 2nd at Lakeside Charlie's in Cadillac. Or Thursday, April 3rd at Treetops Hunter's Grill in Gaylord. The live event starts at 6:30 p.m. and is free to attend with a complimentary gourmet dinner to follow, but seating is limited and tends to fill quickly. Call 888-608-5825 or register online to reserve your seats today. Don't miss this important live event to help you plan to retire well. In our ongoing effort to provide quality financial education, we are now offering a free downloadable white paper titled Tax Strategies for Retirement. Learn about tax reduction strategies that can help you reduce your liability and increase your cash flow. Simply go to cen-wealth.com, scroll down and click the link Tax Strategies for Retirement to receive your free copy of our valuable and informative white paper, Tax Strategies for Retirement.
Retirement's often seen as a time to fully step away from employment. But what are those other alternatives to just fully retiring? So those are questions to ask when you get ready to retire. Is it more suitable for you to have a part-time employment? Let's get into that a little bit. So many people are choosing a path that allows continued engagement. And even if you're taking Social Security full-time, you have about $23,400 above that income that you're receiving in order to have a part-time employment or something like that. So there's a lot of remote work available. Even if you wanted to travel a lot, you could work remotely as well and just work a couple days or a couple hours a week, and even while you're in the Bahamas or something like that. So that's a great idea to think about. And then there's also something called a phased retirement. So if you have a skilled, if you're skilled in a specific trade that you've been doing for about 30, 40 years, and you have a new colleague taking over that job, they might not have that time under their belt. So you could be a mentor to that person and step away a little bit and be able to just work part-time and be able to maybe go play pickleball with your friends in the afternoon, if that works out. And so that's another thing maybe you could talk to your employer about, or if you own your own business, that could be a business model you could talk to them about doing. So there's also freelance and consulting work. So if you wanted to just pick out specific jobs, that's also an option to think about. I know that my father-in-law, that's what he does. He retired recently, I think it was about a year ago, and he just picks and chooses the jobs that he wants to do and in his skilled work, and then he goes and golfs in the villages in Florida for 3 months. So that works out great for him, and it also creates a little extra income to do so. And then there's also volunteer work. I know that here in the Traverse City office, we had a client come in and she was questioning whether or not she had time to volunteer at like a local animal hospital or even a humane society like she's always wanted to do. And now that she's in retirement, she was able to do some of those things and drop off blankets and maybe spend some time with the dogs that she really wanted to. And it ended up turning into like a part-time employment for her. And she was able to make a little side cash as well. So that worked out wonderful for that individual. And every time she comes in, I can see how much happier she is and how excited she is to be experiencing what she's always wanted to do. And then there's also something that I was thinking about when I was talking to another individual. It was another client that came in, and she was saying that she started an Etsy business. It was a small business, and it was good for her crocheting that she liked to do. Like she liked to make blankets and little hats and stuff like that. And it was it can be as small and as big as you want. So she just had a small scale little side business, couple hours a week, and it worked out perfectly for her because it helped give her a creative outlet, and then it gave her a little side cash on that, side cash as well. And then there's another thing that my mom actually personally was doing. She has been a medical biller for years. She's always wanted to get into the interior design world. So what she's done, now that she's in retirement, she was able to get into that interior design, start going to school for that. And not only does she get fulfillment from that, but she doesn't need to necessarily use that to go to work or anything like that. Or maybe she could do specific jobs on the side if she'd like to. But it's fulfilling for her, and she's just so happy about it and excited every time I talk to her. So that's also an option to keep yourself mentally strong and create maybe some friends, new friends, stuff like that. So there are many alternatives to just full-time retirement. I know it can be a little daunting for individuals. And if you have any questions, we're here in the Traverse City office to maybe walk through those things for you, maybe develop a plan and see if maybe there is some income needs that you might need to fully retire. So there are many alternatives to full-time retirement, and we're happy to talk to you in the Traverse City office upon these things. So the key is that work-life balance, and if you're feeling fully fulfilled.